Okay, this is Howie, and I'm here to help you win with money. The market is closed on February 9th, and I wanted to just give you a quick summary. Market ended up pretty much flat, but earnings is out, and I wanted to go over Akamai's earnings. And here it goes. You can see it from Seeking Alpha. On the non-GAAP basis, it beat by 2 cents. On the GAAP EPS, it actually missed. But look at the revenues. Revenues is pretty good, up about 10%. It beat by $16 million. By division, you can see this. There's some growth here. And you can read the press release if I load that up for you. And here you go. I'm not going to read this. I'll just scroll down. You can pause it if you need. But again, what I do care about is we want to see growth year over year. So there is some growth. I'll scroll down here, different divisions. We saw that briefly. I like up by 5, up by 7, up by 14, up by 15. I don't even need to read this. Look, as long as I see up and not down, up 25, up here. Internet, up 11. As long as everything is up, we are good. We are good. So let's just keep on scrolling down. I don't need to see the details. What I'm looking at, okay, $72 million is spent on the fourth quarter to buy shares. Okay, share buybacks at the average price of 103, which is good. Akamai right now, this morning was trading at 117 prior to close. And here it goes. After market, it actually dropped down. Even with a decent earnings, it dropped $7. Now, normally what that means is the market liked the shares prior to earnings, and you see the run up. But where's the fair market value? I have no idea. But is it like around 110? But I like these opportunities to buy more shares. And I do like Akamai at this price. You see the PE ratio is 34. It's a $19 billion company. You can see this here, 2016 through 19. Company is growing. That's what we like to see in a business. And the next thing I want to do is compare it to FSLY. FSLY, if you look at the share price, looks nearly the same. And if you look at the market cap, it is about the same. It's a few $1 billion short. Now, FSLY is a smaller business. It is not profitable. You can see this. Look at Akamai was in the $2 billion range. And this is, you can see the math. This is 1/10 the size with zero profits. Yet the market values this company the same as Akamai. So they both do very similar stuff. They both are content delivery network, CDNs. Let's get into some details that the Motley Fool has. And here's a new article about FSLY and why it makes it a good edge computing stock. And it goes on, and you can see it here. How does edge computing work? Basically, you put the content closer to the end user, right? You have a whole bunch of servers everywhere. It knows how far you are. It reduces the latency, and then it makes a copy of whatever URL or image you want or whatever you're downloading, but it's near you, so you don't have to get it from a server that's 5,000 or 10,000 miles away. The closest one may only be 200 miles away, not the concept of it. And then it goes on here, talks about all the things of why FSLY. So here is the part that maybe I don't know enough about. Is this really the true advantage? I don't know. I understand Akamai's sort of the big 800-pound gorilla in the space. FSLY must have came out just a few years ago. But if this is a true statement, that could be an advantage. But I just don't know enough to even know how to validate this claim. Now, if you know, please comment below. Let me know. Try to explain it to me so to see if Motley Fool is saying this right or not. The next thing this article mentioned is even has advantage over Cloudflare. Now, I don't follow Cloudflare very closely, but Cloudflare is very popular among things like .io's domains. It is also very popular among the Bitcoin domains. So Cloudflare is used for security for a lot of those Bitcoin websites or Bitcoin exchanges. So I do invest in Cloudflare because I do think there's a reason for why some of those companies are using this particular product. So sometimes when I don't understand enough, I try to invest a little bit in FSLY, a little bit in Cloudflare, and I will invest a little bit in Akamai. And in the end, why should you invest in these type of companies? As the web As the web grows, more websites grow, more user content. Every time people download stuff, generally speaking, it goes through one of these big providers. Another reason to invest in these type of companies like Akamai, Cloudflare, or even FSLY is they add a lot of security into their products. So one big one that you may know is the DDoS attacks, which is the distributed denial attacks of service. Sometimes they send like a million computers pinging your website and it can bring it down. What these companies can do is prevent it, or they can filter it out. They have an algorithm where they can maybe remove malicious pings, and it removes all the fake traffic so that your website can still continue to run. So that's why these type of businesses will continue to grow, because there's more reliance on your servers, and your website needs to keep on running. And when you pay for these type of products, they're getting smarter and smarter, and you're paying for the service that keeps your business running. Imagine you're trying to go to a Bank of America website and you can't log in to pay your bills. Imagine you're trying to go to I don't know, Disney Plus, and for whatever reason you can't watch the latest episode of Mandalorian or whatever it may be. So these businesses are very sticky. If a client signs up for their service, very rarely will they move away from it. And the other reason is these are subscription-based businesses, so it's really easy to predict future growth. And obviously, as companies grow, they add new services. So these, I think, are really good investment businesses for you to consider adding to your portfolio. Please like and subscribe to my channel. Comment below if you have any other thoughts and ideas. And I'm going to end with, let's do this together. Let's do this $1 at a time. Have a profitable day.